Are investors in Fed preparation mode? I think one of your colleagues used that phrase today on M Live.
That's right. I think kind of everybody's taking stock a little bit. You know, we're pretty confident that the Fed's going to move. At the moment, the dollar's kind of, settled down a little bit after it's been up and down this year. Rates kind of at the top of the range, but not really pushing too much higher. Equities have been backing off a little bit from the highs in the US. But I think, what people really want to do now is get through the payrolls data on Friday, get through the Fed the week after, then take stock properly, and then we maybe have another go higher. The things that are making the Fed positive about the US economy and the ability to raise rates should be the things that are making equities investors pretty happy about the macro environment too.
Meanwhile, the yield of the German 2-year, which is to my right, Paul, is creeping down once again after bouncing upwards last week. Interesting findings today on various central banks who, of course, have been using foreign currency reserves in certain ways, contributing to the downward move in German 2-year yields. What have we uncovered today on that?
Yeah, well, so what we've got is, we've got big accumulations of euros by the Swiss National Bank, by the Czech Central Bank, and also some intervention in currency markets by the Danish Central Bank. What they tend to do when they intervene is load up on the safest assets they can get their hands on, German 2s being a particularly good example of that, and it's really helping to push down those yields in the euro area, really keep them near the floor, and of course it makes the ECB's job buying those bonds all the more difficult as well.
Paul, is it of any consequence at all that we haven't seen a drop of 1% plus in US stocks? And would we need to see a couple of sort of tests at that before we would have any kind of correction?
Yeah, I mean, look, we're still above moving averages. There's plenty of reasons to remain bullish on US stocks out there. Even things like looking at the RSI levels, often we've found in the past, the relative strength has been of the index once it's got to overbought levels has been no impediment to further gains in the subsequent weeks. So I think for us to really start to roll over in US equities, it would take something a lot more forceful than what we've seen so far.
What about bonds, Paul? In the US, we're seeing that range continue to hold, and there's a debate over whether we migrate higher or we migrate lower in terms of yields.
Every time we get towards the top of the range, there's people that are interested in it. There are people that need the yield for their portfolios. There's the overseas investors, those in Japan, those in the euro area, stuck with extremely low yields in their home markets, looking out to the US. So there's always more demand out there. But I think kind of it depends what the Fed tells us really in a couple of weeks' time.
ECB tomorrow. ECB on Thursday. Gosh, I'm already on Wednesday. Hang on, it's Tuesday. Wednesday's budget day. Thursday ECB. I'm getting ahead of myself. But I liked your piece, your paragraph on Markets Live earlier, bringing to the fore Mr. Carl Weinberg.
Yeah.
Why should we care about the chief economist of high-frequency economics?
Well, what I like about Weinberg is he's prepared to say the things that most of the investment banks aren't. He's prepared to have an opinion, and he doesn't mind being an outlier. And so he's calling for the ECB to start talking about tapering as soon as this week. That's not the consensus view out there. But what he's saying is there's just not enough bonds for the ECB to buy. And so at some point, they're going to have to face up to the truth. Right now is a good opportunity to do that because we've got headline inflation high. The ECB is likely to revise its forecast for the economy higher. So, why not kind of get the markets comfortable with the idea that the bond buying is not going to be here forever at this opportunity?
I was right on the budget. That is tomorrow.
That
Sterling
is, yeah.
falling. Not really linked to the budget, but it's the big event in the next 24 hours, isn't it, Paul? Interesting day today. House of Lords on one side, and then you've got various pieces of economic data today pushing sterling through a level 122, which we haven't seen for a month or month and a half or so.
Yeah. There's plenty of things out there that are weighing on the pound. There was some discussion, I think, earlier in the day. Is this House of Lords debate sterling bullish? Is it sterling bearish? On the one hand, if we're going to have some kind of interruption to or some delays to the Brexit moves that Theresa May is trying to implement, that could be seen as a positive for the market. The market obviously wants a softer Brexit if it can have it in terms of where sterling should be trading. On the other hand, if we get a little bit more clarity from policymakers now, that could start to help the pound to stabilise. So a bit of a coin toss.